There are a lot of buyers waiting on the sidelines to see what happens with mortgage interest rates. So what do we think might happen in the next month? Hello, I'm Tom Mason with Coldwell Banker Realty. The information I'm going to provide you today is easily accessible for anybody. Anybody can take a look at this and draw their own conclusions. But we know from history, particularly recent history, what tends to happen when we see numbers like this coming up.
Shall we begin?
A lot of the investor class thinks that the 10-year Treasury note will go to 3.5% fairly soon. And the 10-year Treasury is sort of the baseline for mortgage interest rates. If you add 2 to 3% on top of the 10-year Treasury, you end up with where your mortgage rate is. Now, normally, historically, it should be 2% above 10-year Treasury. For instance, if the 10-year Treasury is 4%, add 2, mortgage interest rate should be 6%. Pretty easy to follow. But more recently, the difference has been 3%. So at 4% on the 10-year Treasury, we end up at 7% mortgage interest rates. So let's take a look at what mortgage interest rates have done. More importantly, what's happened recently and why. So if we look at current mortgage rates, if we look at all the mortgage rates throughout history, we know back in 1981 we were hitting 18%. More recently we can get down under 3%, and then we've gone back up a little bit. So let's look back for the last year. You can see this upward trend. But 2 points that I really want you to note. August 4th, 2022, we had some good economic news, and the 30-year fixed rate mortgage dropped to 4.99%. At this time, buyers re-entered the market and were ready to buy. But then we had the uptick again. We were at 7.08%. Now, in the last few weeks, we've seen it drop. Why did it drop? Right about here in November, we received excellent economic news about the October year-over-year inflation rate. It came in softer than expected at 7.7%. People were expecting 8. So what happened? The Dow Jones went up by 800 points, and the 10-year Treasury fell, and the mortgage interest rates followed, almost by a full 0.5%, down to 6.49% on the 30-year fixed. That's still too high for buyers to get back in the market, so we need it to drop a little bit more so that you can afford to buy a home. So what do we think is going to happen in the future? Before we talk about what might happen in December, let's look back to just this week. So you'll notice that this 10-year Treasury note, which I said is sort of the baseline for mortgage interest rates, was trending upwards until Wednesday afternoon. And you can see this is at 1:25 p.m. Eastern Time. What happened at that time? The chairman of the Federal Reserve, Jay Powell, said they are looking at slowing the increased rate of lending. Instead of raising 75 basis points, which they did the last few times, they're talking about 50. And again, the stock market was up by over 700, almost 800 points, and that 10-year Treasury dropped. Better yet, it's continued to fall since then. From November 30th to the 1st of December, the 30-year fixed mortgage rate dropped from 6.63% to 6.29%. If you remember, I just said that the 10 years is the baseline, and then the mortgage-backed securities add 2 to 3%. If they added 2% to the 10-year Treasury right now, the mortgage interest rates would be 5.5%. But they're not. They're adding almost 3. They're trying to make up for lost revenue and inflation. And so we see 30-year fixed-rate mortgages closer to 6.5%. That's got to change. What's going to happen in December? Well, what we have to figure out is what actually happened in November already. When we look back at the last time rates dropped because of a good report, we saw 7.7% year-over-year inflation in October. Was that good? No, it wasn't good, but it was better than the previous months that were 8.2, 8.5, and 9.1. When you take a look year over year, if I'm looking at October's report, which we received in November, I go back to October of 2021, and we see that we were going upward trending on inflation. 6.2%, and then this next October we had another 7.7% added on, which means we had 13.9% total inflation from October of 2020, first year, second year. So what happens in December? Well, December we get the November report, so we have to look back November 21. And we see November 21 was higher than October at 6.8%. But we also can see in the economy that some prices are starting to stabilize or subside. So we expect the November 22 report, which we will receive on December 13th, that's an important date to look at, December 13th, we should see year-over-year inflation for November drop below this 7.7 number. If we see this November report come in lower, let's say even down to 6.9% year over year, we're going to see another explosion in the market. We'll see the 10-year Treasury most likely drop on that good economic news, and mortgage interest rates will follow. Looking forward, the most important date right now to keep your eyes on if you're a buyer of a house or looking to buy a house is December 13th. But before December 13th, today's December 2nd, contact a realtor and a lender and try to get pre-qualified at the current rate to see where you're at. Whatever the most you can qualify for, because when those interest rates drop, you're going to be in a more comfortable position. You won't have to necessarily max out what you can borrow because you'll have a lower interest rate in December. The interest rate may not be absolutely low enough for you to buy immediately, but if you have saved up money for a down payment, or if your seller for the house you want is offering concessions, use that to buy down the rate. You're a closer step to buying your rate down below 5%, maybe even down to 4%. So right now, people look at the market and say, oh, it's a terrible market, prices are too high, interest rates are too high. They are, but they're starting to trend in the right direction. You've just got to be ready for it. And my colleagues and I are here to help.